Hello guys and welcome back on the channel. Today we have a new high win rate strategy to backtest, 98% win rate, a MACD trading strategy from Trader DNA. This strategy looks very promising, 98% win rate. We can make much profit with this strategy, but it will be true. How much profit we can make with this strategy? Don't worry. In today's video, I said it also for the new one on this channel, I'm going to backtest it and revealing you the real average success rate of this strategy. I'm going to improve it and telling you the final average success rate with all the improvements. So stay until the end of the video to know how this strategy performs. Let's start talking about this strategy. I'm going to backtest it on these forex symbols and on the 15-minute time frame with a risk to reward ratio of 1.5 because in this strategy it didn't say a specific risk to reward ratio, so I choose the 1.5. So let's jump on the chart and let's see some trades so you can clearly understand how this strategy works. Here we can see the first trade of this strategy. Okay. What indicators will you need? Only one, MACD. So you search MACD on every platform you use. It is called MACD and it is this one. Then you have to change the settings with this one. So this one, and this one. It's slightly different from the one I used in this video because my software is not able to use a multi-time frame for now. And it's a very expensive operation to use a multi-time frame approach, and it would take too much time. So for now it is not available. So what I have done is suggested to use like a 4-hour time frame and then trade on the 15-minute. So I changed the parameters of MACD to be higher because these are two EMAs. So these two EMAs are high. They were multiplied by 16 in order to obtain a 4-hour time frame on the 15-minute chart. It's not exactly the same, but we are almost here. In future videos, I promise to use to make my software able to use multiple time frames. So don't worry, it will be a feature that I will develop in the future. Okay, now you have this indicator on the chart. It's time to look at this. In order to open a long position, you have to check for two things. So three things. Blue line goes above the red line. Here it happens. Then you have to check higher high and higher lows. So higher lows and higher high. And then you have to check for a doji bullish candle. And in this case it happens. So this is a doji candle. Then you can open your position at the last close, and you will set your stop loss at ATR. So if you don't know what is ATR, is this indicator. It gives you a value. You multiply it by 1.5. So let me put it in the chart. Okay. So in this case it is this value. So you multiply it by 1.5 and it will be your stop loss gap. Okay, we have seen this trade and it was a success. Let's see another trade. Okay, we have a fail here. Why it was a fail? So first of all, the conditions. Blue line goes above the red line. I didn't mention that, but it must happen below the zero line. Here it happens. Then lower highs, higher lows, higher highs. You can open your position here, and as you can see, it was a fail. Yeah, it was a fail. I didn't mention that, but the doji candle can happen in the last. I think I used 5 candles. So and the data are slightly different. Here you can see a doji candle, but on my dataset there was a doji candle. So the data are slightly different. I cannot change that because I use an API that is different from the one on TradingView. Okay, now it's time to check for. We have seen higher highs also, so you can open your long position. And in this case, it would have been a fail. Sorry, almost a success, but it would have hit your stop loss here. So let's check also a short trade. So let's go back in the chart. It is it is not here, I think. Probably it's here. Let me check. Okay, it is here, sorry. Okay, as you can see, lower hikes, lower lows, cross on the MACD, blue line goes above the red line, and then you can open your short position. Risk to ratio 1.5, stop loss ATR multiplied by 1.5 or 3, I don't remember. Let's check the strategy. 3, sorry, it's 3. Okay, and yeah, as you can see, it would have been a fail again. Not again, it is the first fail in this case, but it's a fail. Okay, but we had 2 strategies and 1 fail with a risk to ratio of 1.5. So maybe this strategy performs good. Let me show you the default result of this strategy. As you can see, 37 is average success rate on the trend dataset. The number of trades is really low. It's not profitable. It's not statistically profitable. Very bad results. Let's check also the average success rate in buy and sell. And look at here. Average success rate in buy 31 and in sell 44. It's higher on sell. Maybe this could have been could be a criteria to improve the strategy. We will see it later. But now let's, before making any statistical analysis, it's important to check that the strategy you have, the default strategy you have to backtest, it's not overfitted, because if it's overfitted, it doesn't make sense to improve a strategy. And how can you tell? You can know if your strategy is overfitted or not. You may have to do. There are many ways, but one way is to have a confidence interval test. As you can see, this is our confidence interval at 90% sureness. So let's go to the 10th dataset and let's see how does it performs. And as you can see, a really high average success rate on the test dataset, 46%. It was profitable, but this average success rate, it's in the confidence interval. Yes, it is. So if the test average success rate is in the train confidence interval, you cannot say that these two average success rate are different. So with this test, we can say that the strategy it's not overfitted. It is almost overfitted because this average success rate it's located here on the Gaussian distribution. So probably this one is not one of the best running strategy, and with these conditions. And yeah, that's it. And also I would say that the number of trades is really low. I don't like it when it's too low. And if you have checked also other videos, I always say that you must have at least 1,000 of trades in order to do some statistical analysis. And yeah, I think that's it. It would be difficult to make a statistical analysis on it because the trend dataset it's very small. And yeah, and another thing I want to say before making a statistical analysis is that I don't really like the check on the higher highs, higher lows, or lower highs, lower lows, because it's not these are lower highs and lower lows, but if you use your mind, your brain when you have to do this analysis on the chart, it's quite difficult to spot them. It's not so easy. And also for a software, it's not like what you expect, because if I have to look at this chart, these lower highs, lower lows are not the most easy one to spot, if I have to be honest. And it's an expensive operation also for every computer to find them. So I'm not really a big fan of it. Maybe check for resistance level, support level, it's easier, but higher highs and higher lows, they are not the easiest one to spot. Also with a computer or any other automation software. So, but that's it's my opinion. If you are able to spot them in a easy way and effective way, feel free to do it. That's my opinion. Okay, but now it's time to improve the strategy. It's time to see if we can make more profit on this strategy. And for today's video, I decided to use only one conditions. Add only one conditions. As you can see, there are any other criteria reside MACD on this analysis file, because the only condition I will add is to trade only sell trades. Why I decided to trade only sell trades? Because first of all, the average success rate in buy, it's too low to make it profitable. You have to gain at least 9% on the average success rate. It would be difficult, and also you would have lost too much trades, and probably you would have overfitted it. And also, by only checking sell trades, let's add this only the sell trades conditions. Your number of trades would have been like 100, and again, the 100 trades are not enough to make a good statistical analysis in it. Probably you would have overfitted it. So let's not add any other conditions. Let's take into consideration only sell trades. The number of trades is anyway too low to make it a good statistical analysis, but at least we are profitable. So it's time to add these conditions. So let's go here. So here I say that don't trade buy, and let's trade on sell. This is all the code I wrote for this strategy for the sell. If you are curious, I'm always showing you it. So you can see that this is the code I showed you. These are the rules I showed you on the chart. So now it's time to run again the strategy, and let's see if it's really profitable or not. Let's see. Okay, as we can see, 43 as average success rate. It's not 44 because new positions were opened, and we have like 100 trades like we expected. So maybe 1 or 2 positions new, but that's it. And as you can see, it's not statistically profitable. Sorry, it was profitable but not statistically profitable. What we can see also, maybe we can see that let's see max fails in a row, 7, max successes in a row 6, pretty good. But as you can see, 100 trades are surely not enough to say that if you try this strategy, 7 fails in a row will be the max fails in a row you will see. And yeah, the Gaussian distribution also, it's not the correct one, because the Gaussian distribution is useful when you have an high number of trades. There is not a specific number, but in statistical, when you are doing a statistical analysis, you have to try it, and I think that 100 trades are not enough. Maybe 1000 it's a more appropriate number, but that's my opinion. Now it's time to run the strategy on the test dataset, and let's see if we have not overfitted it. So let's run again the strategy and let's see how it performs. Okay, as you can see, 43 as average success rate. It's in the confidence interval we have seen before. It's like here, so pretty good. But we can say that this was a statistical analysis, a good statistical analysis. Probably not. We have made some profits, but considering that these are the last 3 years of data on the 15-minute chart, you would have made like from a starting account of $1,000, you would have made like 200 profit. So from between 18 or 20% profit on your starting account. Yeah, I don't think it's a good result. And also, the other thing is that this statistical analysis, I don't say that it doesn't make sense, but it's not. These results are not so statistically important. But that's it. Before ending this video, I remind you that I'm not a financial advisor. These are not financial advices, and trading is very dangerous. I'm not responsible of any use of these strategy or other strategies on this channel. Make your own consideration, pay attention. But if you enjoyed this content, if you find that this content is interesting and useful, I remind you to leave a like, leave a comment, subscribe, and see you in other statistical analysis video. Bye!